Luckily, it
Yep.
kind of hit there in Cedar Key, didn't it? There's not too many people that live there, from my understanding.
Yeah. Yeah. Hey, everybody. Yeah, there's
You guys hear me?
pretty much from
Yep.
Yep.
from just outside
You can or
Tallahassee
no?
down the coast. And
I
I
can't hear
is
you.
You can't hear us? We can hear you.
Trent, are you telling us how you're doing out there in Florida?
yeah, we were just talking about it. And
Carolinas are getting destroyed right now.
what's that?
Starting to get a bunch of claims from Carolinas. They're getting pretty bashed too.
Yeah, everything I heard last night on the news on the Weather Channel said they were going to get really hammered. Um, my daughter's in Savannah and they were under tornado watch last night, but she said nothing happened. But my area, we just got a ton of rain. We're probably, I think, well, it hit Tallahassee, which is about 2 hours from me. West, that's east of me. So we got real fortunate. But I know Tallahassee got hit, and then Perry, Florida, Cedar, was it Cedar Keys took it pretty hard, which they typically do. But a friend of mine and I were talking the other day, and he says, if you go past Tallahassee down to sort of as you get past sort of the arm or the downside of the armpit of Florida, there's nobody who lives there, and the trees are 4 feet tall. He's exaggerating, but it's literally that's where pretty much every hurricane, I think, in the last couple of years is just sort of headed to. So, um, but yeah, we're lucky. So when Hurricane Michael came through, I forget what year that was, prior to 2020. It was 15 miles from my house, and I had a friend who stayed, and they lived like in Lynn Haven, which is right the center of it, went straight up Lynn Haven, and she was like, "I'll never do that again." She goes, "This is grounds for divorce." Because of the trauma of it. She said they were hiding in their this is during Hurricane Michael, but hiding in their closet, and they live in a condo, and you could see the sliding glass door just bowing. And then when they hit the eye of it, it's real calm in the center of the eye. She said they walked out and they looked, and she said you could see tornadoes, just like a dozen tornadoes was just on the rim of it,
Oh my
and
God.
it's insane. But yeah, I was thinking about it this morning. I was like, how unfortunate for a lot of those people, because a lot of those people, especially when I noticed that when Hurricane Michael hit, a lot of these homes are passed down and they're paid for, and they don't have homeowners insurance.
Yeah.
And to this day, you can still see blue tarps on people's roofs because they just don't have the money to fix them. And as insurance costs rise in this country, or especially specifically in Florida, and I know Mark's experienced the same thing, um, it's really putting people in danger. And I just can't imagine those people in like who got hit last night who don't have homeowners insurance or car and homeowners insurance particularly. Um, how do you replace that? How do you fix a house? It's just I don't know. It's one of those things that gets under my skin. So
So,
anyhow,
Trent, Scott can't hear us. Is there something we know how to? He's not able to hear us.
Well, whoever Eric is, he's got his radio going. That might be like if he mutes, it might not. It might allow you to hear Trent.
Yeah, Eric, you have kind of a TV going, I think. But Scott can't hear
Sorry.
us at all. He sees our mouth move, but so I just chatted with him. He can't hear us.
I don't even see
okay,
Scott on the
But you can
screen.
hear me?
I
I
can
can
hear
hear
you.
you.
Huh.
Oh, there
Yeah,
it is.
we can hear you. And yeah.
Good morning, everyone.
So it must be in his settings somewhere because it's only him, right? Everyone else can hear us?
Yeah, you can
There
hear
was a
me.
little microphone in the bottom left corner.
We were having this problem on the Discord yesterday.
Yeah, we were. You got it?
Can you
Okay,
hear me?
good. Sweet.
Yeah. So good
Okay,
morning.
maybe
I am
his
Kerry.
speakers
Okay.
weren't working or
So
something.
didn't hear me? Okay.
I like your headphones.
Yeah, thank you.
You're
Looks like a
styling.
pilot. Doesn't he look like a pilot? He looks like Scully. Like he's gonna land on the Hudson.
Yeah, here we go.
Yeah.
Take off.
All
Great,
right.
great
What did I
movie.
miss?
Watch those bird hits. We don't want bird strikes. So
Also got to my headphones, I think. Do you guys hear me?
Yeah,
we can hear
Oh,
you.
okay.
perfectly.
Thank you.
So I want
Yeah.
to we'll get going here a little. I'll go over kind of market conditions, and then we'll look at some charts and talk about markets, and we'll look at the Discord and see, kind of go over, because I know we have new people. We'll just kind of go over how the Discord works and how we put things on the paper trade portfolio and all that, and we'll just go forward with that. So this week was interesting, and it was really interesting because China kind of went nuts, and it just showed me how much trouble the Chinese economy is in because of all the stimulus that the Communist Party is putting into their economy because of what's happening with their real estate that happened at Evergrande, a couple of years ago, and just the deflationary issues that are happening with China and their economy, and that reverberates, through our economy also. Get my screen here. So 6.8 trillion has been wiped out of the Chinese economy since 2021, while 18 trillion has been lost in housing. Okay, so that's kind of the start of what's going on with the Chinese. The Chinese people have responded by cutting spending. They're not spending over there anymore. The result has been a massive decline in small companies that cater to retail and dining. And this is bad because private enterprise in China employs 80% of the workforce and 90% of the new jobs. That's according to the Harvard Kennedy School. So China vowed to save this private economy by stabilizing its property sector from further slumping, boosting its stock markets, and ensuring necessary fiscal expenditures, according to the readout from the Politburo meeting yesterday. Top decision-making meeting, which was chaired by the president, President Xi, came after final authorities rolled out a raft of stimulus measures on Tuesday. So the People's Bank of China cut the reserve requirement for Chinese banks by 50 basis points, and that was supposedly going to free up 1 trillion yuan in the banking system, so they have a liquidity problem. The head of the central bank also promised to reduce mortgage rates by 50 basis points on new loans and push banks to reduce some existing mortgages by 50 basis points. So they're trying to, the real estate and housing market is just in a slump, and it's been in a slump, bringing their economy down. There was a sense of emergency intervention in yesterday's Politburo meeting because, as Morgan Stanley analysts note, the Politburo usually does not hold economic sessions in September, suggesting an increased sense of urgency about growing deflationary pressures. But they said China's government did not yet appear to have reached the whatever it takes moment on the economy, at least not yet. Economists warn that China is in danger of slipping into full-fledged deflationary spiral as the property slump weighs on domestic consumption, even as investment in manufacturing rises. So they've gone in and they've done a full-fledged try to bail out their economy, and we'll see how that works. The last time they did it, it didn't work so well. So you see what's happening in Germany. Germany's in pretty much a full-fledged recession right now. And then, we talk about the 50 basis point cut that the Fed rate from last week, as they projected that core PCE inflation in 2024 and 2025 is expected to remain above their 2% target, and unemployment, which is now at 4.2%, is expected to rise to 4.4% in Q4 and in 2025 before going back to 4.2%. So again, we cut rates, even though they tell us the economy is good, and even though they didn't get to their 2% month over month, year over year target, even though inflation is still up 20%. And they're looking at unemployment to continue to rise but they're going to cut rates to try to keep that from rising any further. So, what's the significance of the 50 basis point rise in or cut in federal funds rates? Well, the last two times they cut rates by more than 50 basis points, the economy fell into recession a few months later. First time was January 3rd, 2001. The result was over the next 448 days, the S&P 500 dropped nearly 39%, and unemployment jumped by 2.1%. Then on September 18th, 2007, right before the great financial crisis, they did it again, another 50 basis point cut, and the S&P plunged by 54% in the following 372 days. Unemployment surged by 5.3%. The recession lasted until mid-2009, made worse by the housing market collapse and the global financial crisis. So by deciding to cut rates by 50 basis points, the Fed has really determined that they're going to abandon their inflation mandate. They're not going to get it to 2%. They're going to focus on our unemployment issues, even though they say that the unemployment issues aren't that bad, because Atlantic Fed Bostic said the other day that progress on inflation and the cooling of the labor market have emerged much more quickly than previously thought, to add to bets of a sharp rate cuts in the upcoming meetings. So if everything's under control, why is Bostic saying we're going to, have more rate cuts, sharp rate cuts in the upcoming meetings? So again, how is inflation going? If we looked at the CPI and the PPI, the core CPI and PPI last week, they moved up, okay? And then the year-over-year core PCE index today, okay, not the regular headline, but the PC index rose also. So inflation is not quite tame. And if you go back and you look at what happened with Arthur Burns and some of the other Fed presidents that started cutting rates before it was ready, you can see that inflation can catch back on it and move forward. And then we talked about housing. So the S&P Case-Shiller 20-city home price index in the U.S. rose by 5.9% from the previous year in July of 2024. Pending home sales in the United States edged higher by 0.6% from the previous month in August, ahead of the market expectations of 0.3%, and trimming the 5.5% drop in the previous month. But from the corresponding period of the previous year, year over year, pending home sales are down 3% in August. Okay, so home sales are down, prices are up. How about new home sales? This week, new home sales of single-family houses in the United States fell by 4.7% from the previous month. So prices are still high. We're seeing that the sales of homes is slowing down. Nearly 7 out of every 10 homes, or about 68.5% on the market last month, had been sitting for at least 30 days, up from 63.9% a year ago. It was the 6th consecutive month that the share of month-old listings increased, and the highest share for any August since before the pandemic of 2019. So we always hear Janet Yellen and everyone talk about, there's a housing crisis because we don't have enough houses, but we're seeing that there's a lot more houses on the market coming up now. They're not selling. The house prices are still higher, okay? And new houses and existing homes are not selling either. And this is with declining mortgage rates, okay? So the average interest on a 30-year fixed rate declined by 2 basis points this week to 6.13%, okay? And that's reaching a new low since September of 2022. So interest rates are coming down. Housing prices are still up. We're seeing more houses on the market for a longer period of time. And that's a good thing, I guess, when you look at it from a Fed point of view. We talk about manufacturing. The S&P Global Manufacturing PMI fell to 47 in September from 47.9 in the previous month. That's contrasting with market expectations. It would rise to 48.5, and that's marking the 3rd consecutive month of contraction in U.S. factory activity at the sharpest pace in over 1 year. The drop was owed to the sharpest decline in new orders for goods, underscoring the pessimistic momentum for U.S. good producers and driving production to fall for a 2nd straight month. The declining demand for inputs drove delivery times to shorten to their lowest level since February, indicating spare capacity across the supply chain. Consequently, lower capacity needs made goods and producers shed the most jobs since June of 2020. So they're not ramping their factories up. They're seeing demand go down. So you're seeing in manufacturing, you're seeing jobs being cut. Prices charged for goods and services are both rising at the fastest rate, for 6 months with the input cost. This is a manufacturer and a service. In the service sector, a major component of which is wages and salaries rising at the fastest rate for a year. So we're starting to see wage inflation also. When you look at the fifth district, I think that's Virginia, they of manufacturing index, they came out and they edged down to -21. Okay, so that's contraction. And that's down from -19 in the previous month. So it's worse than the forecast of -17, indicating the steepest decline in factory activity since May of 2022. Okay, so housing, manufacturing, you've seen inflation's not yet tamed yet. And even in, you think about places like the art market, okay? And the art is something that, I don't go buy things in. Trent probably, his wife is an artist, so they sell art. But the dual pressures of American political volatility and Chinese economic decline has slowed art sales in recent years. In 2022, the combined value of the top 10 art pieces sold at Sotheby's Bellwether May auctions were 760 million. Last year it was 403 million. This year the total was 312 million, according to Bloomberg. So the art sales are going down. Rich people aren't buying art as an asset anymore in the last 3 years at least. And at Sotheby's, the situation is so dire that some executives question whether the auction house would be able to continue paying employees on time. Their alarm was not entirely unfounded. In the spring, some staffers received promissory notes in place of incentive pay. The auction house is also as much as 6 months behind on payments to art shippers and conservators, according to the Wall Street Journal report. So I don't know if you're seeing that with your wife, Trent, in the art world. I know you go to a lot of shows. Is that something even on your level you're seeing?
So Ginger her market is, I would say, household income of say, I would say 150 to a million range. She's selling more big art, so art that is $1,500 or more in price. So she's that middle market. Sotheby's that's the Van Goghs, that's the Picassos, those are the multi-million-dollar paintings. We're going to a show starting the 12th of October through the 26th in Round Top, Texas. And it is a pretty big show. It's a lot of decorators go, interior designers, that kind of thing. She'll probably have in those 2 weeks about 1 million people will go through that show. So I will have a better idea of what that market is, what I call the real market. And that's you and I, that's people on this call, will have a better sense of what they're spending. But for her, she's doing well. She's had a pickup in sales, but she's also not selling, a Pollock for $50 million. So she's still in that, say, $1,000 to $10,000 price range. And we'll see. But yeah, I sense, I know a lot of artists in my area who are in that same category, and they live, painting to painting in a sense, and they're feeling it as well. I mean, they're feeling it. So Ginger's is on an upswing, and I think it's pricing and personality. But we'll see. I'll have a better, measurement after this big show. This is a big one for her, so I'll get a better sense of it. But we're seeing our area. We're seeing homes sit on the market for over 6 months now, and price reductions of anywhere from 5% to 10% right now. So
that's in a resort area.
That's a resort area. That is probably average price of a house in a 20-mile span of where I live is probably about 1 million to 1.5 million. So you're starting to see price pressure there. You're seeing more longer listings. I've seen over 365-day listings, and that's becoming pretty common. So that's that upper middle class to lower upper class, I think, category. And so I don't know. We'll see. Art and cars, I think, are all two good barometers of the middle class.
how long did a house stay on the market 2 years ago in your area?
Less than 15 days.
Right. So you're seeing the
Give you-
difference out there.
Yeah, to give you an idea, my house was appraised on April of 23. Yeah, April of 23 at $945,000. Today I have two houses behind me, same construction, same square footage, the whole bit, and they're on the market for 750 to 800, and they've been on the market for over not 6 months. So they're not
When they
moving. So,
when they get down to 2.25, give me a call, will you?
well, if they get to 2.25, it's below my cost basis,
No,
which
but no, I mean for
I
me.
yeah, I'll let you know, and I'll probably
Yeah,
could get you a deal right
yeah,
now
probably. Well,
because
let me know. Okay.
one's an Airbnb, most of them are Airbnbs, which is most of my area, but also that one house behind me is there. These people are carrying two mortgages right now.
Yeah,
Terrible timing when it came to buying a new home and trying to sell one.
yeah. And I think that's not just around your area. That's in a lot of markets too. I mean, where I'm
Right.
at, houses, I live out in the country and there's some pretty big estates out here and gentlemen farmers move out here and they used to be they were hardly ever any on the market, but then when they were on the market, it was less than 30 days they were gone.
Yeah.
And now my neighbor across the road, he finally sold his. It took 8 months to almost a year to sell his. He moved to Missouri or something. So
Yeah.
anyway, so let's move on. We talked about housing, manufacturing. I'm going to talk to Bob a little bit down Florida on manufacturing here in a second, but something else that's coming up that I don't think has gotten a lot of attention is what's happening in the labor market as far as unions and strikes. Okay, and Goldman and analysts have created a framework specifying that the International Longshoremen Association and the U.S. Maritime Alliance, a coalition of port operators and carriers, failed to reach a new contract agreement in 3 days by the end of September. A strike along the East and Gulf Coast ports could erupt, jeopardizing $5 billion in daily international trade. Okay, this goes all the way from New York to Houston, all the way around Florida. Goldman's Jordan Halliger told clients, this was yesterday, that upward to 4.9 billion per day is at risk in international trade along the East and Gulf Coast, along with the potential for supply chains to likely become less fluid due to emergent congestion, which could in turn result to a reemergence of a transport price inflation, meaning the cost of transport's going up, the cost of transport goes up, inflation goes up, and also if there's supply jams and they're sitting out in the ocean waiting to unload or have to go over to the West Coast, there's going to be supply shortages in the stores again, okay, which causes prices to go up. Clients were reminded about the scale of the potential labor action early next week. And this is Goldman Sachs. Any strike would immediately result in 45,000 ILA workers walking off container ports. These ports represent 52% of all port traffic in 2023. In other words, any disruption would spark massive supply chain snarls for the eastern half of the nation. In terms of companies, this is what they're looking ahead at Goldman Sachs. In terms of companies, we see potential upside risks for those with heavy exposure to West Coast from added volumes initially, such as Union Pacific and Burlington Northern Santa Fe among the rails. Although all the rails could see some business at some point, if more goods come into the West Coast and have to go to New York, for instance, eventually there could be an interchange with Norfolk Southern or CSX. But the immediate positive impact would likely be for West Coast rails and another heavy West Coast participant, which is JBHT, which handles intermodal, which with meaningful exposure to the West Coast as its main partner is Burlington Northern Santa Fe, and that's owned by Berkshire Hathaway. So the union, and I'm thinking about trying to join this union, demands include an 80% pay raise over 6 years, claiming that workers deserve the share of profits foreign-owned container carriers received during the pandemic. So we've got that looming out there, and if that shuts down, it's going to shut down a lot of secondary and tertiary companies and such, and we're seeing that right now with Boeing. Okay, Boeing, hoping to end a nearly 2 week strike, said Monday that its best and final offer includes 30% raises over the next 4 years, up from 25% in the initial agreement, but still below the union stated goal of 40%. The new offer also includes improvements to retirement plans, brings back annual bonuses that workers were disappointed to see cut in the previous contract. However, the union, representing over 30,000 workers, said the offer was thrown at us without any discussion, that Boeing disrespected the union by releasing it publicly before the union was able to discuss the details internally. Negotiations are continuing as we speak. A prolonged strike. This is the problem with these strikes because it's not just Boeing. It's not just the dock workers. Prolonged strike, along with an ongoing strike by 30,000 machinists at Boeing that has already started to ripple through the aircraft maker supply network, could put a dent in the U.S. job market next month at a critical moment. Economists at Oxford Economics last week estimated the two labor actions could reduce payroll growth by 100,000 jobs if they stretch into mid-October, and that's only 2 weeks. Okay, the effect of a strike on the supply chain and labor markets go well beyond the striking company. For example, 5 workers at the nearly half-century-old independent forge company in Orange, California, were laid off shortly after Boeing Machinist Union rejected the new contract proposal. That included a 25% pay raise over the next 4 years. More layoffs could be coming at the tiny independent forge with a workforce of 25, or even a shuttering of the doors permanently if labor disputes linger for months, as some anticipate. So the Boeing strike is hurting little companies all over the place. When I used to work, my first job was in aerospace, and we used a lot of machine shops and little passivation houses, and there's so many parts in aircrafts, and it's spread out to all over the country to all kinds of. I'd come to Iowa, go to Texas, I'd go up to Minnesota, all these little houses, and if we shut down in aerospace, they shut down too. So it affects the entire country. It affects a lot of companies and a lot of communities. Spiro Aerosystem. What?
Can I
What's
jump
that? Go ahead. Yeah.
So one of my good friends works over here in Newark in the longshoreman, and he's well connected. It's bigger than the pay raise. This strike is really about automation. They don't want automation, and they don't want one worker to lose their job to automation. And that's the backbone of that strike. And it's 99% they will go to strike. So that's something that is going to happen.
Do you think it's going to happen October 1st, like they say?
He told me if there wasn't a deal, because they haven't gotten to the table, they've been requesting a meeting, and that meeting has failed to happen. So unless a meeting happens over the weekend, they're going on strike.
From my understanding, the union wasn't going to meet with the ports until the contract expired. And then the ports put in a lawsuit with whatever government agency in the labor department that unfair labor practice or whatever, that they wouldn't negotiate prior to that. Is that what you heard? I've read stories on
There
that.
has been a meeting, and there's been another meeting request. The union has requested, but management has failed to come to the table.
Okay.
And management wants to automate the port, and the workers don't want to lose their jobs because they're paid very well. These guys, they don't make a lot of money in their regular time, but their overtime, they get double and triple. Like on weekends, it's triple pay, and when they work overtime, it's double pay. They make an amazing amount of money, and they don't. This whole fight is about automation, not really the pay. That's really the bottom line.
What would you say is the average age of a worker that is part of this threatening to strike?
So I would say to you, I have a couple of them that live around me, and one's a very good close friend, his family and everything. His father was a merchant marine also, and that's why he's a merchant marine. I'm telling you, these guys, they bring in about a year, about 350,000 a year. Exactly. And it's not on the money he makes is not made in his regular check. It's all the overtime, is where their money is made. So he's really happy if Trump gets in and says no taxes on overtime because he
Holy
pays a lot
cow.
of taxes, but they make a lot of money. If you do the homework, you'll find out that the owner, head of the company, uh, took like $3 billion bonus last year. That's how profitable the shipping industry is. But anyway, putting that on the side to stay on cue here. That's the average age to answer your question. I would say he's in his 40s,
Okay.
mid 40s, and there's another guy who I know is a merchant marine, two of them actually, and I would say is in his upper 40s, early 50s, and there's another one, and he's probably I would say in his 30s. So
It's a young group.
it's a young group. They're not and typically they retire before, sometime by 50, 52 years old because their pension is so fat that they can.
Yeah.
So I can see why they're fighting this automation element because they're so close. I mean, if the average age is say 45, you're so close to a full pension and you start automating, you start cutting you can cut workforce probably by half.
Huge.
Yeah.
Well, I think
Um,
you're probably seeing probably the same issue at Boeing and all the automakers too, Bob.
Yeah, I don't know anybody. Well, I do know someone in Boeing, but he's not in the operations part. He's more in the engineering part. So like there's no information there. This is a person who is actually, uh, on the ground, and knows what's going on.
hmm.
But that's information
Wow.
you're not going to hear through
No.
CNBC and all these
Nope.
other things.
So as long as we got you on, Bob, I went over the latest, fifth district manufacturing and some other manufacturing reports that came out that said pretty much manufacturing is still in the toilet. What's your view? Because you're right in the middle of it.
In the toilet, it got flushed.
Oh, so is there a turd in there or what?
It got flushed, man. I mean, it's like crickets here. This is crazy. It's
Have
really.
you had to lay people off, Bob?
I've been fighting it. I'm trying not to do it. I am starting to rotate days off for the warehouse and everything. It's kind of it's I don't want to lose good people. So, but as it continues, it's that day you walk in and you finally say, "Hey, I just can't keep doing this." But
Right.
Yeah.
I don't know. I'm trying not to. I'm trying to wait it out, for the election and everything. And I know that the election's not going to change anything right away. I don't know. The market is bad. What you guys are seeing is nothing. I would be the first. I'm the first guy to feel it. I'm the first guy to feel the relief too. Right?
When the orders come back,
That's right.
right?
They're not coming back. So, and on the note trend of what you're talking about, now I live in Florida, both places in very wealthy neighborhoods. And
Mhm.
my neighborhood, they're still ripping down those big those shacks on the beach, and they're replacing them with multi-million-dollar homes.
Yeah.
However, the homes that are in the range you're talking about that are, I would say, 1 million, because my neighborhood's about 1 million to start. Those homes, they're not really selling. Anything below 1 million is not selling. It's sitting on the market. And like you said, 6 months, I wouldn't say it's as long as that by me. I would say it's probably, I would say 3 to 4 months. It's gone to 120 days.
Yeah.
So I mean, I second what you're saying, but I'm in a little different neighborhood than the average. I'll tell you, in New Jersey, here, my bookkeeper just sold his house. He put it on the market over the weekend and it sold 1.1 plus. Okay.
Wow.
Over the weekend. There's no inventory here in New Jersey. And when it comes on, there is someone there to buy it. So I don't know. It's a weird market. I've never seen this market before, the way it is. Very, very strange. And there's uncertainty. I mean, you guys go back far enough. When you have uncertainty, it doesn't matter how much the house is. If you have uncertainty and people worried about jobs, they don't buy. But
That's true.
we're seeing something different here.
And that's why I'm, when I'm talking about these strikes, and then you compare it to what you're hearing out of the Fed and what you're hearing out of CNBC, they're not even considering these strikes that are happening now or about to happen. And what, when people are on strike, they don't go spend either, and they're not buying new houses.
Right.
And they're not going, Trent and I were talking about the other day, all the little restaurants around the factories and the gas stations, those things all get hit too.
Yeah.
And I don't see any of that, reverberating through, any of their talk. All I hear is, oh, we're soft landing, consumers are resilient, everything's great. And it reminds me of right before, the great financial crisis. I was hearing the same kind of thing, both out of the Fed and out of the financial media. And it just scares me a little bit because I'm looking at, we just talked about Independent Forge in Orange, California may go out of business if they don't get, Boeing back up. Spirit Aerosystems in Wichita, which, Boeing's going to buy back. They're reviewing contingency plans regarding furloughs. The company spokesman said yesterday, adding that the key supplier of Boeing has not yet made a decision. The Financial Times reported on Wednesday that Spirit would begin furloughs in 3 weeks if the strike continues. Okay. Paramount is implementing another round of major company-wide layoffs on Tuesday. In a memo to staff Tuesday morning, I kind of made fun of this the other day. Co-CEOs George Cheeks, Brian Robbins, and Chris McCarthy said the company will undergo a two-phase of its workforce reductions today, but by the end of the day, 90% of these reductions would be completed. And I told Trent, I said, well, if they have 3 CEOs, you can get rid of 2 of those. I can help them do that right away. Because if you need 3 CEOs, that's pretty amazing to me. So there, I helped them out a little bit. Stellantis, who makes Rams, for Dodge, laying off nearly 200 workers at Sterling Heights assembly plant, citing intense external market conditions. Southwest Airlines is planning to reduce service to and from Atlanta, cutting more than 300 pilots and flight attendant positions. Disney's in the middle of a new wave of job cuts as part of the cost-saving initiative. 300 positions, all based in the U.S., are across Disney's corporate operations, legal, HR, finance, and communications. Vail Resorts, the world's largest owner of ski resorts, is letting 14% of its corporate employees go. That's less than 2% of its total workforce as a part of an efficiency drive after reporting a widening loss in the final months of fiscal 2024. And again, if you go look, jobless claims came out. Number of people claiming unemployment benefits in the U.S. dropped by 4,000 from the previous week to 218,000. They were expecting 225. Despite this,
I don't understand that.
well, despite this decline, well, I think when people get laid off, there's a severance package there, Bob, and they don't go and file until that severance is done. And I think that's kind of a lagging deal, or the report's just full of crap.
Everybody gets a severance.
I know.
It depends on what level, job you have. Right?
Yep.
Before you get any severance. I don't understand it. And
Yep.
I don't know. I don't know how to decipher that data. I think we're being lied to once again. However, I use that a lot because, history has told me that they continue to lie to us for whatever reason.
And we've seen that in a lot of the jobs report. And even Chair Powell has made a comment about the reliability of the jobs numbers. But what the scary part is these are the numbers and reports that the Fed uses to make decisions about interest rates. And these are numbers that investors and trading houses and banks make about where they're or manufacturing about where they're going to invest. or how
So,
much they're going to invest.
right, and if that was the case, they should have went back, what is it, March numbers? They dropped down 818,000
Yep, yep,
jobs. They readjusted. I
yep,
mean, what small number, right?
yeah.
I mean,
Well, yeah,
as if you take that, they're way late, right?
yeah.
Because it was all based on the reason why he wasn't dropping
Interest rates.
interest rates was because of that data, but that data
It's
was tainted.
Yeah, and so now he's dropping interest rates because he's afraid of all the unemployment that's coming, and he knows it. Okay, an interest rate drop isn't going to historically has not stopped unemployment from rising. Okay, and they know that. They went 50 basis points. You know,
Yeah,
and then
and then not for anything, the 50 is not enough to make a soft landing.
no, but it's enough to scare everybody.
Yeah,
Including the
there's
Bank
something
of
to talk
Japan.
about there, right?
Yeah. So if you look at consumer confidence, the U.S. Conference Board Consumer Confidence Index fell to 98.7 in September, missing the 103.9 consensus and making it the biggest drop since August of 2021. Consumer confidence dropped in September to near the bottom of a narrow range that has prevailed over the past 2 years, said Dana Peterson. She's a chief economist at the Conference Board. September's decline was the largest since August of 2021, and all 5 components of the index deteriorated. Consumer assessment of current business conditions turned negative, while views of the current labor market situation softened further. Consumers were also more pessimistic about future labor market conditions and less positive about future business conditions, and further income drop. Okay. So the consumer is not, at our level, is not seeing the happiness of the market at the market level. And again, the markets are not the economy. So why is the consumer seeing this? You just look around. In California, State Farm recently requested permission from state regulators to raise rates by 30% for homeowners, 52% for renters, 36% for condo owners. Allstate Insurance just received approval to raise rates by an average of 34%. The increase is hitting some residents hard. Well, no kidding. I mean, I was telling you guys, mine doubled here. And I got some good news this week. My agent went out to non-standard market, she called it. And I'm like, is that the black market? She goes, no, it's not. And she found me a good policy that was actually reduced from the amount I was paying before they doubled it. So that worked out good for me. So you find a good agent, and I said, well, how did you do it? And she said she went out straight to a broker and negotiated it. So that helped me out a lot, but most people aren't doing that. Okay.
I am. I do it every year.
I try to every year too, and I've got a really good agent, and she spent a good 40 days figuring this out, and she did really well for me. So I'm very happy about that.
My problem
That's
right
it.
now, I got a Cybertruck, and Progressive came out and they want 20 grand to insure it.
Oh, holy shit.
Yeah.
You must be a bad driver, Bob.
No, I'm not.
Oh, okay.
My son is, but I'm not.
So when we talk about inflation, the post office is planning to hike the cost of the first class stamp 5 times between now and 2027. The first hike will happen in July of 2025 in order to give inflation more time to decline, the post office said. They might be waiting a while. After that, there will be 2 more increases in 2026, followed by another 2 in 2027. Postage stamps have experienced a 630% rise over a 50-year period. But there's hope. Austin Goolsbee came out this week and he says, he's a member of the Fed from Chicago. There are some warning signs, but the economy still has underlying strength, Goolsbee said. He highlighted recent upticks in unemployment primarily reflect an increase in the labor force participation rate, with payrolls continuing to grow and consumer spending holding steady. Okay, that's how he sees the world. And then again, the market is not the economy. Okay, S&P added 0.4% yesterday to close at a fresh record. Nasdaq posted a solid gain of 0.6%, while the Dow Jones gained 260 points as a combination of strong corporate earnings and upbeat economic data lifted investor sentiment. And again, stock market's not the economy. They're not connected at this moment, and that's why we have the bond market. The rise in long-term duration yields is an indication that the market sees risk that inflation can be higher, and the Fed won't care because they're focused on unemployment right now. So again, we can still, as swing traders, do a good job finding places where there's opportunity, and we do it every day, and we go over it on the charts, and we talk in Platinum Live, and so we are making money. But overall, the economy uh, is shaky at best, in my opinion. Okay, uh, and it's harder to find swing trades, and you've got to be a lot more diligent in your swing trades, and you've got to be really diligent about your long-term investments in your IRAs, because you don't want to go through a period uh, where you lose money, and it takes you 10 years to get it back, because that's lost opportunity cost. And for a lot of us on this call, I can just look and just simulate that we're probably a little bit older, and we don't have time to make that money back, unless, okay, unless you own Visa shares, okay, because Visa shares are lower after Bloomberg revealed that the U.S. Justice Department is preparing to file a lawsuit against the world's largest payment network operator as soon as Tuesday. Unnamed sources in the report said the DOJ's antitrust division is expected to file the lawsuit in federal court today. Government prosecutors allege Visa participated in a range of anti-competitive conduct. But if you're in the know, you're okay, because unnamed source financial disclosures show that California Democrat spouse Nancy Pelosi's husband, Paul Pelosi, sold 2,000 shares of Visa on July 1st for at least $500,000. The ex-account Nancy Pelosi's stock tracker flagged the trade on Tuesday, the same day the Department of Justice filed a lawsuit against Visa, alleging that the company maintained an illegal monopoly over the U.S. Debit card market. In 2022, Paul Pelosi grabbed more than $1 million in NVIDIA call options just a week before a congressional vote on providing massive subsidies to the chip manufacturing industries. He sold them after she received criticism over the timing. So if you're in the know, or you happen to know a member of Congress, that might help our swing trading a little bit. So I'm gonna pursue that and see if I can write letters to Congress and see if they might be able to help us out a little bit, in what's going on, since they seem to do really well for themselves. But other than that,
Maybe walk the halls.
yeah. Hey, Bob, you can come with me.
No problem. I'll
come
fly
with
out. I'll meet you there.
Yeah. But anyway, before I open it up, and look at some charts here, you guys have any comments, comments about the economy in general, or macro, or anything that you see, or anything you're worried about? Anybody?
I think we look at this data, we hear this information, none of it's really positive. I try to put on the small portion of my brain that exists on the what's the opportunity optimistic side of this. How do you look at a market or economic environment like this, and going back in time and looking at history and looking at what performed well in environments like we're are at and entering? And there's not a lot that did well, but there is a handful of areas that did really well during the great financial crisis, the dot-com bust, all that. And I think that's when you're looking at and this is not a swing trade side of things, it's more of a long-term perspective, or intermediate to long-term perspective, is how do you switch that 401k or that IRA to more defensive? And there's really, three areas, and that's gold, that's US Treasuries, and long-term US Treasuries and midterm US Treasuries. If you go back and look at a monthly chart and go back and look at those periods of time and how those did in line with those negative periods of time, they did better than equities for sure, but there was also a good hedge against your more intermediate to long-term portfolio. And so I guess when I hear this news, and more I've become focused on where's the opportunity in all this. I know it's coming. I know there's a bigger, explosion in part-time jobs versus full-time jobs. I see that everybody's going to strike here soon enough, and there's going to be a massive inflation. How can I take advantage of that? Well, I mean, not to be, unethical or immoral or anything, but how do I position to protect my families well? And I think that's something we have to, along with coupling that with a good swing trading process and capitalize on these things. I think that's, we have to think that way. as well. And it creates incredible opportunity. I mean, billions will be made during the next financial meltdown. It's just we've seen it in the past. Who's it? Paul I forget his name. Anyway, so he made what 7 or 15 billion on the housing meltdown in '07. And then there's what Michael Berry, who as well did very well. So there's opportunities in this, and I think that's as a hedge or a defensive positioning from a intermediate to long-term position. We need to consider that because we don't. You could kill it on your swing trading portfolio, but if your core is destroyed, you're still in the negative. So,
Yeah.
anyways, this is more and more I think about that stuff.
Well, what you're thinking about is risk management. That's really what you're thinking
Absolutely.
about. Yeah,
Yeah.
and
Yeah.
that's a big part of how much are you willing, and even in swing trading, we talk about it all the time, don't we, Paul? How much, when you look at every trade, what's the risk versus reward? Okay. And depending on your risk management tolerance level, which mine is really low, I don't want to lose any money. Okay. Or if I do, I want to, keep it to under 2% on any trade. Um, that helps you out when you know that up front. Okay. But a lot of
Yeah.
times we don't think about it because we are so programmed to think, stay in the market and it'll come back. It always does, which it does. Now we don't know how long it takes to come back. Okay. And if you don't have much time left, and you're about to retire or you are retired, and you're in the market because, that's where you need to get your yield. I mean, we looked at the treasuries, the treasury bills this week are now at, 4.6 something percent. And we talked about, Paul and I on the Discord, but, we found CDs at 4.75. So we moved, well, at least I did. I moved away from treasuries and into CDs. And you're going to see what's the effect on the government going to have when they don't have people putting money in treasuries anymore because they can go get it at a CD. So these are the things you just got to be aware of. But again, if our yields on so-called safe money markets, treasuries, CDs starts to go down, then people are going to go out on the risk curve again and look for more risk. And you got to manage that risk if you're going to do that.
Yeah.
Uh,
I think a
have
good
you guys
risk management.
noticed?
Go
Have you
ahead,
guys
Bob.
noticed banks have gotten a lot more aggressive and keep wanting cash?
What
What
I
did-
haven't
say that
personally, but
say that
Banks
again,
are getting a
Bob.
lot more aggressive in wanting cash. In other words, they're offering, pay out more money to put the money in and then higher yields. That's what I've been noticing lately.
Yeah, that's what I've noticed this week, at least in the money markets, that when I went and looked at what Treasury is offering for a 30-day and what banks are offering for 30 days, banks are now higher than treasuries.
Right.
It's on a 30-day CD.
Exactly.
Yeah.
so
Cash.
to get that yield though, they have to go buy an asset that pays that out plus their spread. Does that mean that CD is taking more that CD is taking more risk to pay out that kind of yield? So, are they going down the food chain when it comes to credit quality? I mean, are they going from AAA to or AA to triple B now to get those yields? And is there a level of risk in that?
Yeah. Well, I mean, for a consumer, I always look, for CDs, you're guaranteed, allegedly by the FDIC for $250,000 on each of those CDs, at one institution. So, how much money the FDIC has, that's a different discussion,
Right.
but at least on paper, that's what we have. So,
Yeah.
I mean, money's flowing. If we look at, gold or gold's high, like you were saying,
Yeah.
Bitcoin has been, doing well. Let me pull this up.
That'll go to 72,000 and then dump.
So here's Bitcoin. Went over its 200. Okay, it's been playing around the 200, and now it's crossed over. Okay, it's going to keep going up. I always like to see a back test of this, and it looks like it's going to going to continue. You'll look, all your oscillators are looking good. You go over and look at, MicroStrategy, which is a MicroStrategy blew through its green line of death up to where we're seeing sell orders. We're still seeing pretty good oscillators down here. Paul and I think we were talking about this morning, Coinbase. Okay, Coinbase right up to where we're seeing sales went above its. So, money's moving. You got to be risk tolerant. Okay, you got to use your charts. This is on the daily. If we went and looked at a weekly of Coinbase, you see on a weekly chart, it's just getting above the 9 finally, just above the 50. It's been under for 4 weeks, under the 50, and for quite a while under the 9 week moving average. And we don't have any confirmation on a weekly, but it appears like it's kind of bottomed a little bit, and for 3 weeks it's been coming up. So anyway, there's stuff out there. Let's look at gold while we're here on the weekly. There's gold on the weekly. You can see, whoa, gold's just been on a tear, basically back to March. We had a little flattening out here during the summer, and then back off we go with gold. Silver, right up to the green line of death. We've hit this 3 times now over weeklies. Again, it's what we're seeing. This week, I got lucky with the Micron deal on Western Digital. Western Digital on the daily chart. I had this in the watch list. We got in right about in this area down here. It's over the 9, right when it crossed over the 9. Look at all this support down here. The 9, you had the 20, you had the 50, you had the 200, came down and bounced. And then Micron came out with their, totally unknown to me. I kept this because talking to Paul, we were talking about, following your trading plan and keeping it a little bit. On this day, I didn't have a full candle close, underneath the 9 like I had over here. Okay. And so I said, I'm going to just keep it and see what happens. We weren't into it very much. And then the next day, Micron came out and came up here and hit my sells, because I'm like, okay, it's over the Bollinger. That's quite a bit of a profit. I'm going to take it. Took it, and you can see what's happening today. It's come back down, using the Bollinger right now as a support level. But, like I said, when the market gives me an opportunity to make 4 or 5%, I'm going to take it, because I don't know where it's going to go the next day. So that's kind of what we've seen market wise. Let me go one more thing here. I can find it. Okay. What's up? I want to just talk a little bit about the paper trade portfolio, because there were some questions. We have some newer people on the call. So the paper trade portfolio is just exactly what it says. It's for when I put something on the watch list. I try to put it on here. I'm not saying you buy it, but we just put it on and see how it tracks. So, like the first one we put on back in January was Berkshire Hathaway B, and this was the price. That's today's price. Well, that's the price we got out of, because I switch it. But when we put it on, this was the price when it was listed. Okay, on the paper trade portfolio. So then I just paper trade it from that point. So I'm not going in unless you see a yellow here. This is when I'm actually going in, and I'm like, I'm going to wait and get a better price than the one that's listed. And that's when it's yellow. I got a better price than when it was listed. And then, I see it most of the time. I just play them from where it was, where we started. And so this is just what I recommend everybody do. is track your trades. Okay. And this one's just paper trades to say, you know, here's the date, here was the when it was listed, stock ticker. You can set it up so you can get, you know, the real-time price. And then I just put here's support 9, and the support, and here's resistance R1 and R2. And I don't know why the exit dates are gone. They must have got, but that's, you know, and I track it by week. So you got your weeks, and some weeks here's 2 trades. Okay. Other weeks you got more trades. Just depends on how the market's going. And so this is, again, these are just the prices when I list it, and it's not a buy. You don't have to go buy. But what the watch list does is it gives you an opportunity to look at some stocks that have a potential for a good setup on a swing trade. Doesn't mean you have to go get into it. I try to when I put it on the list, I put a chart on there, and I say, here's what I see. You know, use your own, develop your own trading plan and decide what you want to do. You want to use these, you can. If you want to find your own, I know a lot of people find their own and they have a different trading plan. But I would start with paper trading, you know, and track it like this so you can see what you would do and what you don't do, because it's a lot easier. You make a different set of decisions when you're actually not trading any money, because you'll take more risk and you'll say, okay, I'm following my trading plan on this one, and you can see what happens. And then when you start trading your own money, you know, it just seems like emotion cuts into it a little bit, and you start getting off your trading plan. So again, uh, this is just a tool that I have put out there to kind of show how I set things up to look and see what I would want to trade or would not want to trade. You can see they're not always good ones, but I'm very conservative in what I do. So uh, if it's not conducive to trading, you know, like here's only 3 trades. Okay, I'm not going to trade. Some weeks, you know, here's 4 trades. Okay, and here's 2. Okay, and then I started recently just putting notes in here. What happened this week? NVIDIA earnings, PMI manufacturing, non-farm, you know, CPI, PPI, FOMC interest rates. You know, this week I track what it would be weekly. Okay, and then I just track what it would be since the beginning. And the paper trade portfolio assumes that we are trading 100 shares. Okay, just to keep everything equal. And Kerry did a video yesterday, I think, and he went and said, he looked at it and dug in deeper and said, if I only had 10,000 shares and I was trading this and I broke this up by $10,000, and then he went and he averaged up what the gains or loss was. And then with $10,000, I think Trent was it like 25,000 or 26,000, it would have been,
Yeah,
you know,
it was
just easy.
I think his average, what he figured out through his analysis, the average trade was like 2.69% return since the beginning of the year. So
Right.
if you took $10,000 and you had you know,
Per day,
alloc
per
hmm?
day, 2.9 per day on average is what he did.
Was it? Oh, did he do it on a daily basis? I thought
That's
he broke it.
that that's what I thought he said was per day, but I don't know. I have to go back and watch this. I didn't even know he was going to do a video.
Yeah,
I
none of
didn't.
us
I
know
didn't
when it's
until I
going to do
saw it.
anything.
So yeah, I did.
But
I didn't know
I
until
think
I saw it.
well, the point, and I think looking at when you sign up and you look at that watch list, it's like, okay, this is your ideas that you've researched over the weekend, and you're posting them. And when you post them on a typically Monday, or if you add to it throughout the week, you're looking at it and saying, okay, the price of XYZ stock is here. It has the setup that meets your guidelines. If you're not familiar with the guidelines that Mark follows, you can find those right here on the
Right
um,
here.
and you can download those. And I would encourage you to download them and read through them, because it gives you a template to build your guidelines as you learn more. But using that watch list gives you that idea of, okay, here's Berkshire Hathaway, for example. Here's what Mark, when he put it on the list, here's the price he put it on. And then here are the things he's looking at: support, resistance. You know, here's his guy. You know, if you look at his guidelines, match it up to the watch list, you'll see he's using the 9, the 20, the 50, the 200. He's using RSI, slow stochastics, and MACD, and then he's setting up his entry, and then his projected where he's most likely to get out, his exit, and then he just does it 1, 2, 3, 1, 2, 3, 1, 2, 3, and I think that's what in Kerry's video was he was pointing out was this systematized approach has generated consistent base hits, which eventually gets you to the World Series. And I think that's, how the Yankees have won. I think you're wearing a Yankees hat today, have won multiple World Series. So there you go. So I think
they just
that's
won the East. Yeah.
okay. I I don't track baseball, but I think that's when you're looking at this watch list, step one, if you're new to this, step one, build yourself a watch list. And I actually will probably build a template that you can download that's similar to what Mark has there, that you can fill in yourself and start doing your own paper trade portfolio. Start with paper trades because it's cheap, it's better on the pocketbook. Build a process that you feel confident that you will not deviate from when you implement it with your own cash. And then every week, sit down and look at your trades and go, okay, where did I win? Why did I win? And then where did I lose? And why did I lose? What was going through my head when I lost that? Did I go off track? Did I deviate? And if I won, why did I win? Because I won because I stayed on track. I stayed to my guidelines. And as you build confidence and structure, you're going to end up building eventually. You'll come in and go, okay, I'm thinking more of this term, time frame versus this time frame. And you may tweak your guidelines. But I think this is an excellent base, and it's a proven system. The biggest hurdle we all run into is, as Kerry refers to it, is the voice in our heads. And that is when we get too confident, too cocky, and we start tweaking something that worked, thinking we can make it better. And oftentimes it costs us in the long run. So that's the basis of it. But I'll work on over the next week a template that you can download and use and apply.
That'd be cool
So,
because
yeah.
again, I try to got crazy on this one. I missed this one, but I try to get out before 2 or 3% down. This one
Mhm.
I gambled a little bit on. I didn't get out, but we did well this week. But here's half a point. Here's 1.25%. Here's 1.62%. It just depends. It's different. But I try to get out, but I'll even get out. If I see something going, I'd hate to lose. I'll take $6 over losing $6 any day. And that's like this trade here. And so, Paul and I have talked about it. It's like a business. If you run it like a business, it works a lot better. And this is just part of your metrics of how you're doing. Okay, and a lot of people, the first thing you got to do is start out with a trading plan. And I have my guidelines on the Discord, and you don't have to use my guidelines. You can use your own. Okay, let me pull this up.
Hey, Mark, I have a question.
Go ahead.
Go ahead.
For example, I know it's a watch list, and I was trying to follow up your trading guidelines and try to understand the watch list to learn, right?
Right.
So, and after that, of course, eventually I'm going to create my own trade guidelines or whatever. But I want to understand, for example, if we take the last trade that you posted on September 26th, can we see on the chart column by column what does mean in the chart? Is that possible?
On which chart are we talking about? Are we talking about the
For
paper
example,
trades?
yeah, for example, Intel, that was the last suggestion or whatever. If we can see on the chart and try to understand on the chart what you put there, just to know what you read.
Are you talking about?
Talking about
okay,
Kerry.
so
I would just put in
put Intel on your screen, and then I think you put it on the watch list 2 or 3 days ago.
Are you talking about this, or are you talking about the
Yes,
regular
I
chart?
am talking about you put that Intel, for example, the
Right.
that one. Can we
Yeah.
see? Well, I know that was on 26, but if we can read that on the chart to try to understand how I have to
Sort of
do
walk
it.
through the trade
Well,
on
here,
on a chart.
let me show you how it works. Okay. So
Okay.
here's our Discord.
Mm-hmm.
Okay. And this
We
is
don't see
charts.
that.
This is, oh, you can't see it?
Mark, I think he knows where to find the charts. He just wants to
Right.
say, okay.
Okay. Let me go through this just for everyone, and then we'll go to the chart. Okay.
Okay.
So every morning I go in the charts of interest. We go in and we talk about, what charts we have, and I'll put charts on here. Okay.
Mm-hmm.
And
We're not seeing your Discord.
You're not seeing
We're
it?
still seeing the watch list.
Oh, okay. Hold on.
Yeah.
All right. Let me try this again.
I was seeing his Discord.
Oh, you were?
Yeah.
Wow, that's weird.
I see his Discord. I've seen it there before.
Okay. You guys
Regardless.
seeing this? Are you seeing this?
Yep.
Yes.
Okay.
Why am I not seeing this?
So here, you're not seeing it?
I
seeing
can
your
see it.
watch list.
I see your Discord, and I see you're on charts of interest, and I see $6.
Trent, I think you're frozen because your photo's frozen.
Yeah.
Oh, okay, then that's what it is. Okay, go ahead, Mark. I'm sorry.
So here's charts of interest. Okay. And so this is where I just show you my ideas. So here's yesterday. Okay. Yesterday I said there's one position on the paper trade, which is WDC. I stayed in this position due to the fact that there's not been a full candle close below the 9. I try to give you my thoughts. Looks like with today's market run up in technology, there'll be an opportunity to exit this position with a nice paper trade gain this morning. Another chart of interest I may want to include on your watch list is Intel, which is currently trading under its 200-day simple moving average. So take note. All the oscillators are in the green. There's some sell orders around 25.54. Support is at the 9. I said the market looks open big, so choose your entry price as well. There'll surely be many price gap ups at the open. It's best not to chase price action. So I just kind of give you my thoughts. Okay, so right now I have WDC, and I said watch Intel. Put it on your list. And again, these are charts of interest, not a buy list. Use your trading guidelines. Watch for futures earnings. Stocks trading below 200 require proper risk management techniques. Keep your stops tight. So we go through that. Okay, and then I put the charts up. So here's Intel. Okay, so I was telling you, Intel just pretty much just crossed over the 50. It's above the 9, and it's above, it's following up the Bollinger Band. Here's where your stocks, can you guys see my cursor?
Yes.
Yeah.
Yes.
Okay,
Yeah,
so here's where the sell orders are, okay? Here's where the upper, the green line of death is. And so you can see the Bollinger Bands are kind of diverging away from each other. We're above the 9. We just got to close above the 50. We've got some room till the sell orders. We've seen good price action. You talked about Qualcomm. And then I said, yeah, Micron's earnings should give it a tailwind, just like WDC. Said, I'm glad I followed my trading plan. I stayed in on WDC. And he agreed. So we talk in the morning. It's a nice one on WDC. Thanks, Paul. And so the next day, we talked about the PTP has one remaining position. And what I'm going to do is I'm going to get rid of this watch list, because if you go over to the watch list, this is where I got rid of WDC. Okay. So here, this was during the week, during that day, WC gapped up this morning as predicted in support of the Micron earnings report. Price gapped up past the UBB and almost to the IRL. Let me pull this up. Here's your IRL. You can see it gapped up here, went right past where the sell orders are, went right past where the Bollinger Band was, and then it almost went up to the IRL. At this point, I said, well, I want to get out of this. I want to take the profits. Can you still be in it? You could still be in it if you wanted. I'm seeing a little bit of a, although this is embedded, it doesn't give me, I don't need to get out of it, but I've seen this enough that I'm like, when it goes up, I'm going to take what the market gives me. And I got out. And that's right here on this line, this yellow line, where I put in. And you can see, price gapped up past the UBB and past the IRL. Price action hit my stop to provide the PTP with a 4.5% gain or $3.05 a share. He said, when the market provides me an unexpected gift, I'm happy to cash in and collect the gains. So that's what you saw in that. So I think I'm going to get rid of this channel and just keep it under charts of interest. So it's all in a, I think that's where some confusion comes from. So
Who's confused?
well, I got some questions from people about, you know, how, the way this works back and forth. I think maybe if you're not watching the watch list or you're not watching the charts of interest, that it can be confusing because you have the same information. It's just not in the same order. You know what I mean?
Sure. Whatever
So
you could put, it doesn't make a difference. I mean, I
okay.
like what you're doing now, but
Okay.
I'll adapt.
I know it.
I'll
And
adapt.
that's good. That's good to know.
Yeah.
So this morning I said, you know, the PTP has one remaining position, that's Intel. With patience, we were able to get a better cost basis as price wicked down below the UBB. Although trading under the 200, all the all-stars made it green. There are some sell orders around 25.78. I'm setting some tight stops on this one to protect current gains. As it's Friday, I'm not planning to add any positions to avoid weekend portfolio risk. I don't try to add before the weekend because I can't get out of them if something happens, a war happens, a factory burns down, whatever. And I just put, for those of you interested in crypto, Bitcoin showed a full candle close above the 200. And it looks as if the 9-day SMA is about to golden cross. I said Bitcoin price influences other equities such as the IBIT, Coinbase. I'm not planning to add these in the PTP, but just wanted to note the recent flow back towards Bitcoin. So you come in here, and here's my chart of Intel, what I talked about. Okay. Here's Bitcoin that I talked about. You know, it's going up. You just looked at that. And
And Mark,
I got IBIT and coin. Yeah, go ahead.
I have a question. Sorry, because like I'm learning and like English is my second language. I
Yeah,
want
you're fine.
I want to understand what the abbreviation means on the paper trade portfolio, like ISL, IRL. I don't know if we have a vocabulary there to try to understand what the abbreviation means.
Okay.
Maybe a
Okay.
glossary.
Yeah. Well, I'll show you here. I'll show you in a second. Okay.
Thank you.
So I just want to, and this is where it gets confusing. So you go over the daily watch list. Okay. So we talked about Intel, and then I wanted to put some tight stops in there, you know, to get a profit if I could. And so today Intel got triggered, or not. Yeah, Intel. Where is it? Here it is. So this was this morning. Intel wicked up above the upper Bollinger Band, which became support, and then retreated back to that level when it hit a sell, providing us with a 3.36 gain or 79 cents a share. This position trades toward 200, which adds risk. I didn't want to carry the position over the weekend. And here's your chart. You can see the yellow line where we got out. Okay. So I try to give as much commentary. I just think, Paul, if I just combine these two so it's all in a row, that it makes it easier for people to follow. Yeah.
But Miguel, I think he's looking for like Intel's fine. Terms for I think to cover what is support and what is resistance.
Right.
Because there's different Julio, I mean
yes.
Miguel, you're basically looking for what does support and resistance mean? What is that? I'm trying to understand your question. Okay, so support and resistance could be any line that is supporting the stock, or when the stock goes up, resistance, stopping it from going high. It could be the 9-day, it could be the 200, it could be sells, stops. So there are many types of lines that could be used as a support and resistance.
So
right, that I understand that, but for example, some commentary like ISL then 9 or I
don't know where there used to be a bunch of commentary up on top here, and I had a little.
Yeah, I was looking for that.
It lost.
I saw
it. Is there another page?
Or it's hidden?
No, it was above it. It was above it.
You're hiding. You're hiding 19 cells up there.
Oh, there it is.
Oh,
okay. There it is. Upper Bollinger Band, lower Bollinger Band, upper control limit, or upper channel line, lower channel line. intermediate support level and intermediate resistance level.
I don't know why I cannot see on the website. I don't know why.
It was
Oh, you
probably
can't?
because the website is connected to this cheat sheet. So chances are, if you went there now, I'll go there now and just
Probably
check
there.
to see. It's probably there now.
It might have
So
got hidden.
Yeah, I don't.
Yeah,
Well, Kerry was in there, and when he did his video, he messed around with it a little bit, and so
yeah.
I think he might have hid that for his video, and then we just didn't get it reinstated.
And just an example, for example, in Intel, uh, just to learn and understand what mean
That's there now.
UVB
All right,
then.
hold on.
Sorry.
No, go ahead.
Yes, on the chart, I knew UVB is upper Bollinger Band,
Right.
but how I have to understand UVB then 25.78 pennies in the last suggestion that you did about Intel, just to understand on the chart.
So here's Intel. Okay. This is a Bollinger Band. This is a lower Bollinger Band, right?
Yes, right,
This is an upper Bollinger Band.
right.
You put those in, you go up here in your indicators, and you go to Bollinger Band, and that's how you put them in, right?
Yes.
So then it tells you up here your upper and your lower. When you have it here, you can see up here what it is. So the center of a Bollinger Band is usually the 20 SMA or EMA, which is right here. And the Bollinger Band goes 2 standard deviations on average away from the center. And so when a Bollinger Band is diverging, that means you're either going up or down, okay, and there's more volatility. When the Bollinger Band is converging and going sideways, you have less volatility and you're going to go sideways until you start breaking out, okay?
Mhm.
This is your upper resistance level, and you get that from this setting up here. Oop, that's not it. Sorry. Technical analysis, support and resistance, and then you hit stops, okay? So I always keep mine, you can modify it on the intermediate term. It'll tell you where support is, which is down here in this blue line, and where resistance is up here on this green line. Okay.
Just as a side note, this is unique to Fidelity's Active Trader Pro.
That's true. Now I find this line to be highly accurate. And this line is my line of death, I call it. And that's when I get out. Okay. When it gets up to that point, it takes, in my experience, and not always, it takes some kind of a condition like news comes out that Boeing ends their strike and the 737 is now approved for production, and everyone gets in and it zooms up past that. You know, the same thing we saw with MicroStrategy. Okay. So Bitcoin boomed today and it just took MicroStrategy right past its intermediate level of resistance of the green line of death. But where did it go? Went right up here to where the sell orders are. Okay. And I usually, just from watching this forever, it usually comes up here and it'll play around there and then it starts coming back down. Unless on Monday, you know, we'll see if this will recalculate or disappear because this has broken through it and whatever its formula is takes it away. But, you know, for me if I was in MicroStrategy and it touched that line, I would have been out of it. That's just the way I trade. Okay. And the same thing happens normally on the blue line here, the intermediate support level. I'm just going to go.
How do you?
Well, here's Berkshire.
Sorry.
This is Berkshire. Okay. I don't know why that line's there. It should be gone. So Berkshire, you can see the Bollinger Bands are converging. And you can see that we've just gone into pretty much a sideways pattern until something breaks. You look at the oscillator number 1, which is my favorite, which is the MACD. We haven't had a crossover since right back here where we crossed over the 9. The reason I use the 9 as my level is because the MACD uses the line as its level. When it crosses the 9, that's when the MACD goes down. So that's why I chose the 9, okay, because it's tied into my MACD. Okay, So you're seeing a little bit of, a candle over the 9 today, but
Yes.
you're seeing a little bit of an uptick in the stochastic, but I still don't have a confirmation on the MACD. And that's why I've not returned to Berkshire. Okay. If you look over here, we were above the 9, but we were still below the MACD. Above the 9, below the MACD. Right here, still below the MACD. This one came in, we're above the MACD. Okay. So at that point, if you wanted, you got confirmation here and here, an RSI could pop in, and you could follow that Bollinger right over, or Bollinger all the way up. At this point, what happened? We had a pretty flat MACD, which you can find, but then it went under right here. Okay, it's not a full candle under, so you could have stayed in, see if it bounced, or you could get out if you want to play the 9 a little tighter. You get out, come down here, you get out, you're in here, you're out here or here. Okay, we're above the 200. That's a good sign. It's sloping up, means we have positive momentum. We're above the 50, still sloping up, kind of flattening a little bit, and we're right along currently we're right along the 9 and the 20, which are following each other. So until something comes in to move this with a little more momentum, we're just going to go sideways. And when it starts to come up, you're going to start seeing these Bollinger Bands diverge instead of converge, and you're going to have another opportunity for maybe one of these, unless something happens and it decides to dump. And then you're going to see the Bollinger Bands diverge, but it's going to come down here and follow probably the Bollinger Band down. So that's how I use it. Does that make sense? I mean, it's kind of a quick way of looking at it, but you can go look at my trading guidelines and talk a little bit more about this. You can also go in and just Google, what these are, and it'll tell you. There's plenty of things out there.
Yeah, no.
But I use 4 moving averages, 2 long term, the 20 or the 50, the 200. I use the 20 EMA instead of the SMA, and EMA gives it a little more. The last 3 or 4 days, out of the 20 days, impact the indicator more than if you're just a standard SMA. They're not all equal. And then I use the 9 SMA. These are my 2 short-term indicators. Okay.
Oh, I was using AMA 9 days.
9-day SMA, simple moving average.
No, I was, yes, in my case, I was using SMA 9 and
Yeah, that's fine.
MA instead 20, it was 9.
Oh, what?
Yeah,
Instead of, oh, so this is a 9 SMA. This is the 20 EMA. This is the 50 SMA. And this is the 200 SMA.
Okay.
So the only one that's kind of different is the 20, which I make an EMA. This gives me a little more solid prediction, I think, because it takes in the last 4 or 5 days are more important than the previous 15 days in determining where that line goes. Because all that is an SMA it takes the last 9 days and averages it. And that's where it puts the dot right here on the line. Okay.
Yeah, I'm going to try to switch from TradingView to this one is Fidelity.
This is Fidelity Active Trader Pro.
Okay, because yes, to try to have the same chart.
Yeah. And TradingView is fine. It's just this is what I've always used, and
yeah, but I was trying to set up the green line of there.
Yeah.
Set up and I couldn't find it.
Yeah, that's like Trent said, it's kind of unique to just Active Trader Pro. So this was a nice one. This was DuPont. I mean, I wish I would have caught this one, but didn't. Right here, you had one line over the 9. I didn't get confirmation. Some people will take that, but then you might get it to drop back down. It's one full candle. But I would wait until the MACD gave me confirmation, which would have been right about there. And if you follow the trading plan, I would have gotten out. Well, I might have gotten out along this line, depending on how conservative I felt. But looking at what the MACD is doing and separating from the control line, I would certainly have gotten out today. I don't have a green line of death yet, but I have these sell orders right here. And my biggest fear is tomorrow I look at the chart and I'm in it, and the green line of death comes right here. All of a sudden shows up. But again,
That would
I'd
be
still be
Saturday.
up. Yeah, yeah, yeah. Oh, I'm sorry. Yeah. Well, you never know. Saturday. So anyway, there are good trades out there. This is one of them. You know, it meets just every criteria that I have on my trading plan. I just didn't catch this one.
Check
But
out TMF.
TMF.
Yeah, Miguel was wanting your thoughts on it.
Miguel, I would suggest getting this book because you could read on what all these
Are you
oscillators
talking to
mean.
Miguel or is it Julian? Am I
I think it's
pronouncing it right?
Julia. I think she's talking to me.
Oh,
Yeah,
Julian, I would
Yes.
recommend this to learn what the oscillators are.
You are showing me something because I just watching the chart.
There's, you know how they have dummies for whatever, dummies for pet owners. They have dummies for swing trader.
Okay.
I could benefit from that too, so I'll look into it.
Yeah, sorry.
So so do you put that in the chat or what?
No, you buy it from
it's in the
Amazon.
chat.
Yes, it's in the chat. Yeah.
Oh, okay, thank you.
Yeah, you can go on Amazon and look up swing trading for dummies and it'll pull it up there.
Thank you.
Yeah.
This is a bull 3 times shares. These get recalculated every day. They're meant to be short-term trades and not long-term holds because they can take you down really quick. This one, the MACD is terrible. The stochastic is terrible. The RSI is not good. You're below the 9, you're below the 20, converging. Yeah, this is just not something I would be in personally. I got the 9 and the sell orders right close together. Yeah, these are just tough. Again, you're only supposed to be in them for a day.
Just to give you a little information about these 3 times ETFs, because every year I had to be re-educated on them. They are using future contracts, and future contracts typically trade 24/7. And an ETF recalculates its price at the close of business each day, whereas a future contract recalculates its price every second. So you could buy this ETF and the futures, underlying futures are in the trend of the ETF, but at market close overnight, those future contracts could actually gap down. And then when this ETF opens the next morning at say 8:30 Central, that ETF will recalculate its value based underlying future contracts. And if you saw like a 10% gap down in this, the next morning you're going to see a 10% gap down in the ETF. And that's the danger. As a friend of mine who used to trade for a hedge fund, he said we would use these because it was easy to take money from the retail investor because they would be heavy in it. We would see their flow into these. And then when the future contracts adjusted throughout the night, we would take a short position immediately in the morning and make whatever. And a lot of times people don't understand the mechanics of these. So be very careful with these, especially overnight or over the weekend, because that could be
they're not supposed to be
a real big
traded.
green line to death. Yeah.
Because here's your gap right here.
Yeah.
Look
I
at
honestly
these.
think they were made by the hedge fund industry so they could actually have another trading advantage over everybody else, over every regular guy and gal. So be very careful with them. They're not, and then also take into account future contracts. The price deteriorates over time because every future contract has an end date to it, an expiration date. So just be aware of that. That is also factored into these. So just be very cautious. They're great they can be a very powerful intraday trading if you understand what you're doing. But over a long period, you'll have time deterioration and price deterioration over time if you buy and hold it.
So if you're not educated, would it be better just to stay away until you are educated?
Pretty much. Yeah.
Okay.
I mean,
Well,
if
if
you're a
you
day
Thank
trader,
you. Pardon?
yeah.
if you had
Gotcha.
this, if you had this and you went away for a week on vacation, didn't look, and the market tanked, you know,
You'd
let's
be in
just say,
trouble.
let's say the treasury tanked 20%, just to give it. This is 3x. You'd be down 60%.
Yeah. Look at
That's not good.
SQQQ.
What is
I
it?
think it's SQQQ.
Yeah.
You're shorting the QQQ.
Yeah. If you go out, span it out to say like 2 year or 3 years.
Yep. Oops, hold on.
It's a short ETF on the Qs. You just don't make any money in it if you buy and hold this. If if you're trying to short the Qs in this case, then just outright short the Qs. But this is you're fighting a handful of variables that can eat you up.
Well, you're fighting the
same way
market
on the
that's
upside.
you're fighting a market that's going up.
Well, this is a short one, and this is I think 2 times leveraged. I think it's TQQQ, I think is the long version of this. Am I right about that? Wow.
That's the more risky.
Is that
That's
what
ultra
that is?
pro. That's the pro. That's the long side. Yeah.
Yeah. So you just it can be just be very careful.
Yeah.
Yeah.
Yeah. I mean, I've known a lot of people. I've known a lot of people lost a lot of money on these, because they forgot about them.
If you buy and hold them, it can be very dangerous.
Yeah, it's not a long-term investment for sure. It's a hedging tool, basically.
I mean, if you went to a minute chart or a 10-minute chart, you could see how it possibly give you an intraday look.
Yeah, look at this.
I mean, if you're trading like that's, you could short that, pick it up.
Look at this. Yeah, it's just.
Yeah. This is a 10-minute chart?
Look at this one here.
Wow.
Yeah. Yeah. And that's
10-minute chart.
Yeah. I mean, if you can find setups in a 10-minute chart on something like this, yeah, it could be pretty big, but buy and hold is just not a suggested way of approaching it. Just be very careful.
Definitely.
Yeah.
Learning lesson.
Yeah. Yep.
Yeah. But the other side is the internal cost of them as well.
Yeah, they're pretty expensive.
Yeah. It's the kind of thing if you want to leverage up, the pure way of leveraging up is to take margin. But even in that's risky as well. So just be aware of that.
Yep.
Yeah. So.
Hey guys, I have to come back to work, but it was good to see you, and we talk later.
Thanks, Julian. I really appreciate it.
Thank you so much.
See ya.
Have a great day.
Yeah. Bye.
All right. Well, we've gone for a little under 2 hours. So anything else?
If Active Trader Pro is free for all Fidelity customers, or like you need to pay extra?
I didn't hear very well. Did you catch that?
This Active Trader Pro, is it free for everyone, the Fidelity customers, or you need to pay?
If you have to open a Fidelity account.
Yeah, I have Fidelity for my phone.
Just type in, under search, in Fidelity Active Trader Pro, and it'll give you the app. It'll give a little button on your computer, and you just hit it.
Okay.
Yep. And Trent and I, we have a video on the Discord on how to set up a chart if you want to follow the way I do it.
Okay.
And I'm actually going to use part of this video as an educational piece. I'll cut it up and I'll put it up as well, because I think there's some really great information that you shared there, Mark. So,
well, I think we're going to do more of this during this call to help people out as we get more people in, and we've got experience on here with a lot of our longer term platinum people like Paul and Scott and Bob and now we got Esther down there. I see she's down here too. She's been pretty active, and and we'll just use this more of asking questions and learning. You know,
Mark, could you put up a PSN for a second?
PSN.
PSN. Paul, Simon, Nancy.
Parsons Corporation.
Yeah. As you know, I more of a momentum trader, and I sold pretty much. I had upwards of 30 positions, and they're all gone except for maybe 2 of them, and this is one of them. So I had bought this Friday or Monday. The reason I'm held on to it is because I've been using the 9-day as my go no go gauge. As we spoke about this morning. So. Right. This is an example of what I've been doing for trading and how it's been working out pretty good for me so far. This is, again, my maybe 2 weeks doing this. So it's just another approach where you pick up ones that have a lot of momentum. Some of them start trailing off, and it's another idea of how you can make money in trading. I don't know if you call it swing trading, momentum trading.
You're more momentum.
Yeah.
But it's swing, but again, there's no green line of death, which I don't like, which we talk about. That's fine. That's just me. I've watched, this is what kind of worries me today, Paul, is only 211,000 trades and we're 1:15 in the afternoon. And, yesterday it was 1.3, and then this one here, 7.3. I mean, this is weird. So I don't know what's going on with Parsons, but that's really strange.
I like it because it's over the 200, and every moving average is trending up. So that's why
the thing that I like here, other than that little volume thing that's weird, is you have an embedded stochastic, which means that for at least 3 days, both lines are above 80. So that means you can follow your Bollinger. I like that the price action is following the Bollinger and not really going over it. If you get 4 or 5 of these over the top of that Bollinger in a row, that usually means you're done and it's going to come back in and probably go down. But these are maintaining the Bollinger, so that's kind of nice.
Yeah, Paul, and also it looks like good candidate. You see, red and green alternatively, it's more consistent. I mean, so yeah, couple reds, couple greens, I think looks like it's a good candidate. I think for swing traders, right?
Yeah, another one I just looked at today is McDonald's. Oh, the RSI is low.
Hey, Mike, do you worry about the RSI at all being over 70 or 80?
I don't know.
No, not when it's going sideways. Look how this can go sideways forever. I mean,
Gotcha.
A lot of people say, oh my gosh, it's overbought, but look, 70, 70, 70, 70, 70. We're going all the way back to, this is August 19th, almost a month.
I think you talked about the other stock.
Gotcha.
Well, I mean, same thing here. I mean, look.
Okay.
75, 74, 71, 70, 67, 61, 72. I mean, it's just, this is the one I'm more worried about is the MACD. Then I also worry about, the cells, but, and I worry about where the hell's that green line of death at? I know you don't worry about Paul, but I do. Where is it? But again, McDonald's isn't overly extracting over the Bollinger, 4 or 5 above it. It's nice little slope. You got the slopes heading up. You got a nice golden cross of the 50 over the 200. Yeah.
Yeah, I feel like there are lots of support, and if you find the right momentum stock, that's
what I like. Paul took, and he's been doing this for a while, and he found a style he likes, which is fine with me because it's his trading guidelines, his trading plan. It's not mine, but I can see why he's making money on it. It's just a little more work because Paul does sit there and he watches it like a full-time job a lot of times. So,
I think the work is homework. Finding candidates is more work, but when I buy it, I put the 3% in, and then if it's going good, or later on that day, I'll put the 9-day as my punk out. I'll stop out. But if you have ones that are trending up, it won't punk out. It'll stay in. I got tired of punking out of good stocks. I just sold GEV today. I've been in that for I don't know how long, or traded in and out of it, but it just showed me some sideways action.
You know what happened?
What's that?
The green line of death showed up.
Yes, to me, that's a good way of saying
Look at this.
we got
1,
sideways.
2,
Yeah.
4.
Yeah.
And it's going to drop. It's probably going to drop below the 9. It's probably going to head this way. Look at your volume too. Your volume today, and yeah.
What a run, though.
Crossover. You have a MACD crossover.
What a run, though.
No, that's
run.
it. I mean, this is where I would have wanted to get in right here. One candle close, it didn't go back below, and you can still be in it, but once it hit this, for sure I'm out, because this is what normally happens, and then it does this.
Yeah, and the risk reward sucks then.
Yeah,
so there's no risk reward, right? You're already at the reward area, so get out.
But when it came up here and then you're going sideways, the green line probably came in yesterday or today, okay? And if you came in today, you're below it, and then you get out. But if you got in back here, you're fine.
Right. When you see that price action get closer to the 9 is another thing, right? So if you see the 9 going up and the price action is going parallel with it or kicking up higher, but once those guys, the 9 and the price action start to converge, is a good sign. You should probably get out. You're overstaying your welcome.
Yeah. The first one for me is the green line of death. I'd have got out. The second thing is it's going sideways. And like you said, Paul, this is going to go up and it's going to squeeze that price action. And then it's going to, my opinion, it's probably going to go boom. So yeah, good one. Nice one.
Hey, Mark.
Thanks.
Yep.
I think we got to wrap it up.
Okay. Yeah. Trent, I mean, this is Srini. I mean, I was platinum for a couple of months and I've been coming to swing trade first time here. So I don't want everyone hold up here. So I know it's a couple of hours almost on lunchtime for most of us. So I have 5 minutes, quick questions. If you have, you can, hold on this call. I can have a few questions on this one. I don't know, like, or you can call me a separate, like, can I reach you on separate phone number or something?
So I have another meeting at 1:30.
Okay.
So in 10 minutes.
Okay.
And so can we set up a time? I'll just post him here my number and we can set up a time to get on a call.
Okay.
I'll put it on here on the chat.
Yeah.
Just shoot me a text.
Okay.
And we'll schedule a time to get together.
Bob, tell us when the market changes, Bob.
Yeah, Bob.
Bob's reading his documents.
He's reading.
Did you get that?
Yeah, I get that.
What's that?
Yeah, I can text you. We can set up time for a few minutes. Not much time.
Sorry.
Just 10 minutes of your time would work.
He wanted to know. He wanted you to let us know when you start getting contracts again.
Yeah. Well, I want to let myself know first.
Yeah.
Because it's crazy. I mean, government, it's okay, but outside of government, there's nothing. And I supply a lot of the other companies like Fastenal, MSC, which are my competitors, but they buy from me. And they're slow. I'm not getting purchase orders from them either. So that tells me something.
Do you know of a company called Scott Bridge out of Opelika, Alabama?
No. Let me search, see if they're in my system.
At least Netflix is at an all-time high.
They don't buy bolts though.
People are staying home. People are staying home and watching movies.
What's that, Bob?
No, they don't buy from me. Not in there.
They're a pretty sizable bridge builder here in the Southeast.
Those are big bolts.
Yeah, they mostly buy structural bolts. That's not that's a very competitive field that I don't play in.
Gotcha. All right, guys.
See you guys later.
Yeah,
Thanks, everyone. Have a good
weekend.
Yeah.
Take care.
Thank you.
Bye-bye.
Have a good weekend, guys.
Bye.
Bye.